thank you for joining us on the Cochin Shipyard Ltd Q1 FY19 earnings conference call. We have with us Mr. Madhu S. Nair, Chairman and Managing Director, Mr. Rajesh Gopalakrishnan, General Manager, Business Development, and Mr. V. Jose, General Manager, Finance, with us on the call. We will begin with the opening remarks from Mr. Nair, followed with a forum of question and answer session. Before we start, I would like to point out that certain statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would like to now hand over the call to Mr. Nair to make his opening remarks. Over to you, sir.
Thank you, and good evening, ladies and gentlemen, and we are happy to present the Q1 FY19 results. You already probably have this with you. So the turnover has risen 18% on a year-on-year basis to 658.73 crores. The PBT is 15% up at 161.2 crores. And the PAT is 17% up at 106.31. The EPS is a notch lower at 7.82 because of the higher denominator we have now on the enlarged equity base. And from a segmental point of view, we have almost on a turnover point of view, like about 31% of the turnover has come from ship repair and the balance from shipbuilding. And on the shipbuilding, we are seeing gross margins of 17% at the profit PBIT levels, and ship repair we are seeing at 21% margins at the PBIT level. Significant events that happened during this quarter has been like on the shipbuilding side, we have proceeded well with the aircraft carrier under construction, and the passenger vessels being built for Andaman Nicobar, the smaller ones, the two 500 pax vessels is in advanced stages of erection in the dock and scheduled for launching by end of September. And the block fabrication on the 1200 pax vessels is going on well. The TDV for DRDO is had some setbacks, which was really external to us, and we are talking that with the DRDO, so we are probably seeing some delays on the delivery of the TDV. On smaller ones, on the shipbuilding side, we secured an order for 10 numbers ro-ro vessels for the Inland Water Authority of India, both 102 crores, and we cut steel just a few days back on 10th of August. And the very small fishing boats, which is more of an experiment at this stage, trying to just understand that space better, we are progressing on the construction of those fishing boats. On the ship repair side, I think they've gone fairly well, as seen in the turnover also. And we have the major work is INS Vikramaditya, the aircraft carrier of the Navy, which has been docked now in the shipyard. It's expected to be upwards of 550 crores approximately on the turnover, and that project is going well. The project that had a setback, which was because of the fire accident in February, which is Sagar Bhushan of ONGC, she is also getting ready for delivery by November. So things have generally gone well on the ship repair side also. Elsewhere on the capex side, the dry dock project, which is the big one, 1,799 crore estimate. So that work has started on the ground. So a few piling has been already piled. The last-minute tuber has moved in. The project team and equipment has been moved to site, even though we haven't had a formal inauguration or a stone laying of the function because of non-availability of the concerned ministers involved. We haven't waited for that. We have done a soft launch and we are moving forward with the project. And then as and when the right time comes in, we'll do the formal functions. On the ISRF facility, which is a ship repair facility being implemented, which I had reported last time also, and Messrs. Simplex Infrastructure is the turnkey contractor. Work is gaining pace over there, and quite some work has happened on the ground. The JV investment in Calcutta, Hooghly Cochin Shipyard Ltd, we have crossed the DPR has been prepared. It has been tendered out. In fact, there are 2 companies involved in the tendering process, and the pre-bid meetings are over. All going well, we should be in a position to place a contract within the next 45 days for the HCSL. And movement into Mumbai and Calcutta on the ship repair side, ideally we wanted to move in by August into Mumbai. That is not happening in August. We are more or less done with all the discussions and negotiations, but the final agreement has not been signed. As we are speaking, I was just talking to the Bombay Port Trust. We should be doing this in the next few weeks as we are talking, and starting operations at the earliest. So Mumbai will come online, and immediately after that we'll do Calcutta. So this is what has happened over the last quarter. And just a minute, was there something else? Yep. Out of the shipbuilding turnover, we are having a total shipbuilding turnover of in this quarter of 454 crores, and 81% of that came from the defense. And on ship repair, out of the 204 crore turnover, approximately 60% came from the defense part of it. So with this, it's a quick wrap-up from my side, but would be pleased to take questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. First question is on the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good evening, sir.
Hi, Sandeep.
Sir, my first question is pertaining to the ASW Corvette order. We had been announced L1 position over there almost, say, 10 months back.
Correct.
And we had guided in the previous call that probably by August there should be a formal signing of the contract. So if you could just give us an update, why is there a delay being happening over there? And secondly, since the forex has also moved substantially in that period, will the price be adjusted for that, or will there be a profitability hit that we Cochin Shipyard and GRSC both will have to account for it? I just wanted your views on this, sir.
We are continuously with the Navy on this. The current status is the technical specifications have been discussed couple of rounds, and the draft contract has also been discussed. As you are aware that the price negotiations have been concluded already, and we're just waiting for the Navy. It takes a long time to go through this technical specification finalization. It's the formats and how it has to be done. So people have been in Delhi even as recently as last week. And we are not really seeing any concerns on the contract per se. Because privately the Navy is telling us that they have Finance Ministry approvals on this particular project, and they expect to wrap this up. But I fully agree with you that we were actually told that this would actually be over by about August. So probably it's still a couple of months time from now. This is what is our thinking. On the forex, yes, there is a concern here. We are raising it with the Navy. I'm quite not sure the Navy would be conceding to this. So in all probability, we will have to take this at the current pricing, and how we have to manage it, we'll have to really see how we'll have to manage it. There's a fair bit of part which is Indian on this, and again not wanting to be putting officially, we are talking to Bharat Electronics Limited on a major part of this package to de-risk certain things, so that also to make sure that instead of going to too many vendors, actually talk to Bharat Electronics Limited on a large package, so that it makes the whole proposal more interesting for them also and for us also from a project perspective. And naturally, we have put across certain price levels which we expect should make sense for both of us, and Bell. So I fully agree with you that there is because today crossing 70, there is a concern not just for us, for everybody involved. We will have to address it as we move forward.
Right. And so my second question is, in the previous quarter's presentation, there was an order of 56 coastal security boats from Ministry of Home Affairs.
Yeah.
Not a feature in your recent presentation.
Correct. We did it on purpose because nothing has happened, or we don't have any negative things in writing. But our reading of the situation is that project may not move forward. So we didn't want to bring that on the table this time because even though we have been declared L1, our understanding is it may not move forward. Similarly, so being the situation, there is another project on which we have been declared L1 by the Ministry of Home Affairs. This is a border outpost, and this is about 348 crores. But because of the same reasons, we are not bringing this on the table at this stage, because we just want to make ourselves sure that the Ministry of Home has got enough resources or the inclination to take this forward. So since we saw some reluctance on the part of the Ministry of Home Affairs to take forward that 56 boat project, from a prudent point of view, we didn't want to come out and inform this border outpost where we have become L1. Rajesh, you wanted to add something here? There's been a meeting in Delhi.
Yesterday we had a meeting on this border outpost project in Delhi. It is actually the price negotiation meeting, and generally the feel given to us is that this project is moving forward, and by and large the meeting went off well.
But Sandeep, we don't want to bring this, and if it works well, I'll report it later officially. So just for your understanding, and this is specific reason why we took this off from our presentation this time.
I understand. And so one small bookkeeping question is, we saw a sharp drop in the depreciation number for the quarter. Is there a change in any accounting policy, or should we work with this number for future estimates for the current financial year?
Depreciation actually is almost on the similar line now. It is 8.4 this quarter, and it was 9.83.
Yeah, so there's almost a 15% decline. So
that is normal because there was some software and all last quarter that has been depreciated.
Okay, all right. Okay. Thank you so much for the clarification. That's it from my side.
So no change in policy, is it?
No change in policy.
No change in policy, yeah.
Got it, sir. Thank you.
Thank you. Next question is from the line of Jonas Putha from Phillip Capital. Please go ahead.
Hi, sir.
Hi, good evening.
So 3 questions. So firstly, could you give us the unexecuted order backlog of the cost plus portion of the IAC, sir? Last time around, in the last quarter, that comparable number you'd mentioned was about 6,988. Where does that stand right now?
Jose, do you have that?
In the meanwhile, can I ask the other 2 questions, sir?
Yeah. Joe, can you just... Yeah, please.
Yeah. Sir, as far as the Vikramaditya ship repair order is concerned, what are the execution timelines like?
See, we are planning to undock the vessel on the 22nd of September. and then she goes, then she's going outside Cochin Shipyard. She came here on the 25th of May and 22nd of September, so that's exactly as per the schedule. And then she takes about 4 weeks in the port of Cochin. Well, they do their work, and there would be some works which we will also continue on the work when she is in the port of Cochin. And after that 4 weeks, she sails to Karwar, and there's some work which we will also end up doing in Karwar. So 22nd of September, the bulk of the project is getting concluded in Cochin.
So of the 500...
And as of today, I've just had the Admiral Western Command with me just 30 minutes back, and he is generally happy with the pace of work.
So is it right to assume that the margin improvement that we've seen in the ship repair segment in Q1 is still not fully reflective of the benefit of the execution of the Vikramaditya as yet? As in, since bulk of the execution is likely to happen between now and September, and then follow it up with in the third quarter as well. So this margin that we've seen in this quarter is largely organic margins which you have derived from the base sort of revenue that you typically have in this. Is that a fair assessment?
That's correct. Also, I need to add one more point. See, out of the 204 crore revenue you're seeing in ship repair, 114 is come from Vikramaditya. That's correct, isn't it, Joe?
Yeah.
So that's 114, since we are talking Ind AS 115 from this quarter onwards. It doesn't reflect the profitability on that 114 crores.
Okay.
Because it's revenue and expenditure are both 114.
Because till the time the repair was reached to 75%, we recognize only cost as revenue. We will not recognize profit up to that level. So out of 204, 115 is less than 75%.
Got it.
The profitability part of that is yet to come.
Sure. So, and now basically in terms of the prospect list, is there anything that's come up in the last couple of months that you would like to highlight, given that now the MHA order has sort of put on a back burner, and ASW also is not moving as per the timelines that we'd anticipated? Is there something that's come up in the meanwhile that sort of you could highlight to us?
Not really. It's only ship repair. What you're already aware. That's what is happening. But on the shipbuilding side, it's just ASW which is to come, and this couple of months shift. Really speaking, is not too much of a concern for us at this stage, because right now the concentration is on the aircraft carrier and deriving the revenues from that. The impetus is again on the aircraft carrier phase 3 contract to be signed. So I can convey that the phase 3 contract initial first draft price estimates have been submitted to the Navy. When did we submit this? We submitted on the last quarter of July. Last end of July we have submitted this. So this is now getting into the price negotiations, and we are all focusing on the phase 3 contract. So I'm while I would like to have this signed and sealed, I'm not unduly worried on the ASW Corvette slipping by a couple of months. That's okay, but we just talked to Sandeep, Forex getting into 70 is not a good thing for us, that's for sure. But again, this MHA thing, like this 56 boats, again, we did not want to, we were also not very keen if it was getting too late, because we had taken that on an aggressive position, and we didn't want to keep it unendingly validated. But off the record information we are getting from them is that won't move forward. But the good part is the border outpost, which is for how many? 9 numbers?
9 numbers.
9 number border outposts, seems that's something which the MHA wants pretty badly. So there's an internal thing within the MHA. They feel that there have been a lot of boats that have been procured sometime back from GRC and Goa, and the general feel is those boats have not been put into the best use. And somewhere within the Ministry of Home, they feel that the next set of boats need not hurry. But the border outposts, we can see that there's much more of a hurry. So it is only these border outposts and the ASW Corvette which we are looking for, and the progress we are making on the negotiations on the Phase 3 contract. Phase 3 contract, again, for your information, like last 1 month, the IAC has been reviewed at a high level first by the Vice Chief of Naval Staff and then by the Defense Secretary, both of whom came down to Cochin Shipyard for 2 separate meetings. And the instructions given is to conclude the Phase 3 contract within November of this year. But we are happy to have this by any, as we have always mentioned, between December and March of 2019. So that is where we are moving in. So nothing different to report at this stage.
Sure. Those are my questions, and if I can still get that order book number, that would be great.
Jose, can you...
I don't have the updated number for the Q1. I'll get back to you.
Sure, sir. Thank you.
Thank you very much. Next question is from the line of Sagar Gandhi from ICICI Securities. Please go ahead.
Sir, what will be your ship repair order book excluding the Vikramaditya repair order?
See, Vikramaditya is about 550 crores. How much? 520 crores. And you should take like what we are seeing. You're talking about what we'll do this year, or see this year. I would think we are
excluding the Vikramaditya number.
So that must be around a 300 plus 350.
Okay, so in total it is anywhere between 800 to 900 crores both put together.
Correct.
Okay. And sir, are you also seeing some traction on the ship repair side from increase in oil prices? So I think last time also we discussed that a lot of oil rigs are now coming because of traction in oil prices. So is it also...
see, there are, as we discussed, there are these 2 projects of the ONGC, which we are in touch with ONGC. But it's why we are not able to make much headway on that is there's a fair bit of legal stuff that is... so ONGC has awarded both these projects to 2 different agencies, and they are facing some issues. They have been touching base with us and asking us, can we actually take over those projects? We have conveyed to ONGC that we are not interested to take over the project per se, but if ONGC can short close the existing difficult contracts and then hand over to us, or in other words, we have conveyed to ONGC that we are happy to work directly with ONGC, but not into any tripartite agreement. So there are these 2 major projects hanging out there, and we are constantly watching that space, but nothing to report at this stage.
Okay. Sir, my next question is, while you highlighted the risk of foreign exchange on the ASW Corvette front, what I see in FY18's annual report is that we have procured materials worth 950 crores, or you have imported materials worth 950 crores in last year. So, sir, how big impact do you see for the FY19 year?
See, for all our current projects, except the technology demonstration vessel of DRDO, Forex is a pass-through. Because 4 passenger vessels we are doing for Andamans, there is a foreign exchange variation clause. For the aircraft carrier we are building, as you are aware, it's on a cost plus, so it's on actual cost plus the service charge. And coming to ship repair, all materials we are procuring is on a pass-through basis. So the only area where we are exposed on the Forex is on the technology demonstration vessel. And the TDV, today it's in advanced shape, and there's only further of about, how much was it? Yesterday we had a about a $5 million worth of procurement is yet to be paid. About a $15 million has been bought till now. And this 15 million, it's at an average price of 66 we have cleared. And the other one is yet to be encashed. So all in all, the actual hit we have taken on Forex is on that particular project over the, it's been 2 years now. So it's 9 crore rupees plus the notional loss on yet to be converted part is about 3 crores. So the total hit on that particular project is 12 crore rupees approximately on the Forex. But there is all the other projects, we do not have a Forex issue.
Thank you, sir. That answers my question.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Next question is from the line of Abhineet Anand from SBI Cap Securities. Please go ahead.
Yeah, thanks for the opportunity.
Thanks, Abhineet.
This aircraft carrier, what is the revenue like which is expected in FY19 and 20 as per the schedule?
Jose, can you on FY19? FY20 also. FY20, what's your projection? Is it 1,300 approximately?
Around 1,300.
Around 1,300 crores for FY19, FY20, slightly more.
Slightly more, around
slightly more on FY20.
Okay. And in terms of capex, now that both the contracts have been given, both for the dry dock and IFS, what's the outgo that you expect in FY19?
FY19, see, the commitment we have made to the ministry is 495 crores. But since both projects are moving well, we could see anywhere around 600 to 650 crores going out, because we are just pushing forward on both the projects. And if the speed can come in, because both the ISRF project, Simplex is now getting into the pace, and Larsen & Toubro has started well on the dry dock project. So we will move forward at the pace they can actually build up. So you can take it as, Jose, you have factored in 600, isn't it? Or 650?
550.
550. Sorry, I'm sorry. 550 crores approximately. This may change a little bit, but then we'll keep you updated. But about 550 crores.
Okay. And on this, on the Corvette part, you see, in terms of margin, initially we had this thought that it was a very competitive bid, right? And it was probably a 10% type of margin bid at that time.
Correct.
Now with Forex moving to those regions, what's your initial ballpark number in terms of where can the margin end for this project then? Very, very difficult question to answer, because we are also concerned on this. And what we are trying to do here is, because this is purely commercial, it's not really the financial part now on this, because see, we have made some estimates on the equipment procurement in this. And there are some major equipment and systems in this. And these are basically to deal with the SW Corvette is a anti-submarine warfare vessel. So there are two major sonars on this vessel, and there's a complete set of electronic suite on this vessel. These are the main cost elements. So let's say these costs work out to about a 300 odd crores on each vessel, which we are actually trying to negotiate as a full package with, as I said, with Bharat Electronics Limited. We are seeing positive signals, because from Dwell's point of view also, they may actually end up looking at 16 vessels. So for Bell also, if it works, it looks good. For us also, it looks good, because rather than going to multiple vendors and try to get separate things and integrate, from a technical perspective also, it's got its advantages. From a commercial perspective also. But what we have done is, unlike where Bell is normally on a nomination basis with the Navy, since we have got this on commercial bidding, we have told Bell that let's try to talk against what we in our parlance call offer and counter offer method. So we have given them some counter offers against their pricing, and we hope we should be able to come to a pricing which more than offsets this forex thing which we are seeing right now. But I don't. This is our approach. Since you asked this question, I'm just explaining. So I'm not in a position to tell you at this stage exactly like from that around a 10-ish% what we were seeing. How much are we at this stage? So maybe it will have to wait a few more months before I am able to tell you an exact answer on this.
And so last bit hypothetical question. So we are building these two, one dry dock and the repair facility. Unfortunately, the market in terms of building isn't doing that good, right? Does that worry us by any inch in terms of whether there will be enough orders, say 3 years down the line, 4 years down the line, when we will have, these three facilities up and running?
See, from a shipbuilding perspective, I would be wrong if I say that there is absolutely no concern. Yes, there is always this concern. Well, let me put it from the ship repair perspective. We feel very confident at this stage. So ship repair, the new ISRF will bring in things. What we are doing in Mumbai will be all fine. On the new dock we are building in, it's a ship repair or shipbuilding dock. It's dual use, but we are still hoping and that we will see something major happening from the defense side on the shipbuilding part. We are also parallelly working towards trying to see whether we can get a major series order. Series order is an order where you get 6 to 8 vessels in one order for merchant vessels. So all in all, we feel by the time this dock is getting completed, a little bit of fortune favors the brave also. We are keeping in the picture. But see, the new aircraft carrier is still not finalized. I've been talking to senior levels in the Navy. Things will take time. Only after the elections, we'll now see momentum coming in on those discussions. But yes, there is some concern 3 to 4 years down the line on the shipbuilding part of the new projects. But we hope we should be able to bring in some winning formula at that point of time.
Okay, sir. Thanks a lot and for answering my questions.
Thank you. Next question is from the line of Giriraj Daga from KMSRA Family Trust. Please go ahead.
Yeah, good evening. My first question related to this Mumbai port. So we are seeing delay like month or month. So any particular reason where you can mention that, or like do we sound confident that this time, okay, October we would be able to start?
Yeah, see, there's really no specific reason, but then see, we and Mumbai Port both are trying to do such a thing for the first time. See, right from how the workers are to be handled, which are the areas that will come in, how the CISF will be deployed, what are the legal documents. See, these people have run it for ages. So when we are digging up the legal documents, we are asking them to update the legal documents, show us the clearances they have. So each thing takes a little bit of a time because Mumbai Port Trust is really not a commercial organization, and the agreements have gone up and down. That is now what 6-7 rounds now, more than that.
The draft agreement.
The draft agreement.
Yeah.
So we are down to some let's say 5 to 6 points of disagreement. So it is taking more time than we actually thought. So really no specific reason, but then probably we are doing it for the first time. Just as we are speaking, I was just trying to, the Mumbai Port Trust chairman wants to talk to me and try to finish off these points. But we are see, why we are also in a bit of a hurry is, as you rightly said, see, the MOU was signed in January of this year. And it looks a little bit embarrassing for us also that the agreement has not been signed. The good part is Navy actually is talking of wanting to give us an order around November of this year into Mumbai Port Trust. So there is extreme urgency from our side also to go and sign this agreement now. So really no specific point, but it's got dragged a little bit.
Okay. Second question is that like the new this dock facility where we are making, suppose hypothetically if we get a, let's say IAC2, then also we would be able to have the similar like rig repair facility and all other things working on simultaneously?
See, not simultaneously when the construction is happening, but then see, again, we have an intermediate gate in that particular dock. And again, see, let's say hypothetically, let's say we get a order for an IAC2 today. Yeah. In all probability, to cut steel, fabricate, and that fabricated units getting into the dock, we are seeing definitely 4.5 to 5 years time before that dock actually gets populated with that particular IAC blocks. So till that time, that facility is actually available. And when the IAC is actually in the dock, at the end of the day, like we are seeing something like a 24 months is when the dock will actually be occupied. Per se, the dock per se will be occupied about 24 months. In a tight spot, if things are slack, we could take say about 30 months. But exactly when the IAC is in full bloom in the dock, you can't do a rig over there. But that is something like 24 to 30 months. Right? Pardon?
Hello? Suppose if that get delayed, then we can use for the high margin this repair business.
We can. And this is something which, like oil, as we said, oil going up a little bit. We are having feelers from ONGC, but ONGC is a couple of difficulty working with ONGC is again. Today they are having some bad projects with them. They want us to take over. We are not wanting to jump into any legal tangles. That's point one. Point two, for people of you who are tracking ONGC, they how they contract sites. It's basically my way or the highway type of contracts because they can actually, being a very large company, they can force contracts. So we are sometimes a little bit uncomfortable with some terms of the contract. So we are not jumping into anything with ONGC, just waiting and watching.
Okay. My third question would be related to the, like you mentioned somewhere that, okay, the pipeline is not, we are not duly concerned on that. But what is the, if you can give some pipeline, which are the bids available as of now? We may or we may not bid, but what are the total bids available for next 1 year?
Ajay, do you have that? Like, see, there is just a minute. The only one where the bid is actually submitted is the Polar Research Vessel for the National Institute. But otherwise, there is. Can you just check up with Chevron? Is there any bid which has been put in? But then there are RFQs in the offing. If you can just be if you can just take 5 minutes, we'll come back with this information. But to my understanding, there is only one bid which is actually live and moving. This is the National Earth Sciences Polar Research Vessel.
Okay. So then you can just answer as and when you are ready with the data.
Yeah, I'll do that.
Okay, thank you.
Thank you. A reminder to the participants to ask a question, please press star and 1. Next question is a follow-up from the line of Sagar Gandhi from ICICI Securities. Please go ahead.
Sir, my question is pertaining to International Ship Repair Facility. Sir, while our original RHP documents mentioned that this facility will be completed in FY22, FY23, in the latest presentation Q1 FY19, it is mentioned in completion as 2019, somewhere November 2019. So can you please,
see that in the DRHP, see we have this agreement with, we have taken that land on 30-year lease from the Cochin Port Trust. And the terms of the lease and that agreement was you have to build this ISRF in 60 months, 5 years. That was the terms of the agreement. And that terms of the agreement is what has been reflected in the DRHP. But in practical terms, when we are moving forward, since we have decided to invest the money, we want the facility at the earliest. So we have actually contracted with Simplex for a 24-month completion period.
Okay.
So that is why we are showing this in the presentation, and we are showing the real thing. As of today, I should say that the project is running something like a 2 months behind schedule, but Simplex is pushing, and we also have reasons to believe that catch-up is possible. The good part is they've brought in excellent new equipment, all brand new equipment on site. They've got a full project team. The piling rigs working day and night. They've had some difficulty in getting all the piling rigs as planned initially, but it looks like they can do a catch-up. This 2 months delay, what we are seeing now, should be caught up. So we want now that we are moving forward, there's no point having the facility spread out over 60 months, which as far as the port is concerned, it's not a problem because they also start getting revenues earlier than that. So we are pushing for earliest finish on the project.
So by FY20, we will be able to start taking ship repair vessels in this new facility also.
Yep. 2017 October. When did we award the contract? October? Yeah.
November. Contract awarded in November 17th.
Contract awarded in November 17th. So October 19 is the completion, and let's say even factoring 1 or 2 months of delay, early part of 20 we should be able to utilize the facility. Yeah.
Thank you so much, sir. That was my question. Thank you.
Thank you. Next question is from the line of Devansh Negotia from Simple Securities. Please go ahead.
Sir, my question is, how are you planning to scale up the ship repair business and how we are positioned in the ship repair industry?
See, ship repair scaling up is basically like today what we are talking in Cochin Shipyard is we are pushing heavily on the more lucrative naval orders. When I say lucrative, see, the naval orders are much more larger value, and it's all pre-planned. So they have a schedule of which ship will go for refit at a point of time. So we are positioning aggressively against those projects because, see, the advantage of a naval project is there's a much more higher turnover to be done, and if you can actually handle this within a specific time frame, you can actually make much better returns on these projects. So this is what we are trying to do from Cochin Shipyard. So the strategy here is try and garner maximum orders from the defense on the ship repair side in CSL. See, having said that, like from a number of vessel-wise, more than 75% of the vessels we are doing is non-naval in ship repair. But the value-wise, the defense vessels, you can see is about 80%, about 60%. So this will continue for some time. Parallelly, what we are doing is the biggest bet would be Bombay. So Bombay, if we can actually move forward strongly, again, ship repair is, there are enough opportunities in Bombay, and we are trying to get this Bombay. So it will be between what we are doing in Cochin and what we are doing in Bombay that the maximum impetus would be there. 2 years down the line, 1.5 years down the line, when we'll have the ISRF up and running, again, it's the same Cochin strategy which we would want to do for ISRF. And all these areas, whether it's in Cochin or Mumbai, we want to do central marketing and centralized bidding, and even to a certain extent, key material procurement, etc., we want to do centralized. So our challenge would be people. Because it's not that we can just recruit entirely new set of people for Bombay, and we'll have to put in our own people. And this is the greatest difficulty because we don't have enough people to just move around just like that. So this is one major challenge. The next challenge would be salaries which we can pay in Mumbai. See, Cochin today, like Cochin Shipyard Ltd, what the salary levels what we are paying is pretty comfortable for. But when we come into Mumbai, we are seeing some concerns because again we can't just go and pay higher salaries just like that. So we are trying to invent some methods on contracting and some profit incentive basis and other things. So these are the challenges we'll see. So scaling up, we feel we understand the business. We have the basic systems in place, but getting in the right set of people and getting them to act as a team is because it's a high level of teamwork, ship repair. So when we move into Bombay, these are the challenges which we will see. Initial vessels in Bombay will be handled directly by teams from Cochin.
And how many vessels can be handled by Mumbai and how many can be handled by Cochin? For ship repair?
Cochin, we are handling about 80 to 100 vessels every year now in the present facility. And Bombay, the target is 40 plus vessels. This is what we are targeting.
Okay.
But it will not be at the same turnover level as what we are seeing in Cochin because Bombay, after the dock, it is just some berths we are having in the Indira dock. We don't have the full backup facilities. So, but we are targeting about 40 vessels.
So just last question. What is the average time to execute the order book of shipbuilding and the order book of ship repair? Rough average time to execute the complete order book.
Shipbuilding, it depends, but then it could be anywhere between 30 months to, let's say, 42 months for a normal project, not for a very specialized project, but a normal project from a contract to delivery would be 30 months to 42 months. Ship repair, it's very different because for a normal commercial project, we are talking 20 days, Rajesh, 25 days. 20 to 25 days. Navy has got generally 3 type of categories. I'll ask Rajesh to explain this, if Rajesh can explain the naval methodology.
In the naval ship repair projects, normally they are categorized as short refits, normal refits and medium refits. The short refits are actually, typically it would be a month or so, and the turnover ranges would be between 10 and 15 crores. And the normal refits normally span beyond 1 month. It could be 2 to 3 months. And the turnover ranges in such contracts could be in the range of 35 to 40 crores. It's the medium refits that are the really long-term projects. It would actually be beyond 6 months, and it could, if it's tankers and things like that, it could actually end up with a 1.5 year project. Here again, the dry dock time would be, say, 30% of the overall period.
In terms of revenue, how much range?
Revenue, again, it primarily depends on the type of ship, whether it's a tanker or a training vessel or an OPV. It could actually be, if I were to say the range, it would be between 100 and it could go even to, like, if it's a weapon intensive ship, it could actually run into much more than that, 5 times that.
That's Rajesh is talking on this medium refit on a MR.
On the medium.
But MRs are hard to come, and we definitely go for MRs whenever we get an opportunity. But Navy also has a plan. They don't offload too many MRs every year.
Thanks a lot, sir, for answering all the questions. Thank you.
Thank you.
This question that was asked on the... Rajesh, can you explain this? On the bids and the...
potential projects in pipeline. While we are actually pursuing whatever opportunity pops up on the commercial front, it is a defense category with both Coast Guard, Indian Coast Guard as well as the Navy, which there is more visibility because they have a plan based on which they move forward. So based on that, we have already submitted what is called the documents against the request for information for close to 15 projects of the Indian Coast Guard and the Indian Navy.
These are the RFIs.
RFIs. Now, what happens with the RFIs is once the RFI proposal is acceptable and the Navy or the Coast Guard then issues what is called the RFP, the request for proposal, to the accepted bidders. So we have already submitted more than 15 RFIs and for upcoming projects of both the Indian Navy and the Coast Guard, and we are waiting for the issue of RFPs to submit our techno-commercial offer.
But we should also understand that from an RFI to an RFP, some projects could get actually dropped, and there is a time between the RFI to RFQ, and which could be anywhere between 18 months to 24 months, that kind of a thing. So right now there are no active RFQs with the Navy.
Thank you, sir.
Are we on the line?
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address queries from all participants, you are requested to restrict your questions to 2 per participant. The next question is from the line of Pawan Parekh from Renaissance Investments. Please go ahead.
Hi, sir. Sir, you mentioned about the execution of Vikramaditya ship repair project. So that was, you said, by September 18.
Correct. 22nd of September this year. Correct.
Right. So basically, if I've understood right, you said the order book from Vikramaditya is about 500 crores plus.
Correct.
So all of that is going to be booked in Q2 largely.
Almost 100 crores we have already booked in Q1.
114 crores have been booked.
In Q1.
Yeah.
The remaining will...
Q2.
Other part will come to Q2 and... There could be,
see, after September 26, there's a large vessel which can be only undocked on looking at the best tidal condition. That's why I'm talking about a very correct date of 22nd of September. Now, after 22nd of September, the vessel will still have 4 weeks of work, which will be done in the Cochin port area. From the Cochin Shipyard area, the ship will be taken to the Cochin port area where there is more depth. And that's actually the vessel is with the Navy, and the Navy starts revving up the engines and other things. At that point of time also, there would be some revenue. But your question is correct. The bulk of the remaining turnover, 114 recognized, bulk of the remaining turnover will come in Q2. Some work has to happen in the port, and some work has to happen during the voyage of the ship, and the ship goes to Karwar, her home port. So there also some work happens. So it's not that 100% of the revenues will get recognized by end of Q2. There will be something spilling into Q3 also.
But still a very sizable number, because historical quarterly run rate of ship repair has been like 150 to 200 crores.
That is right.
Next 2 quarters will be very lumpy.
Yeah. Correct.
And sir, secondly, we ended FY18 with an order book of about 2,100 crores on the shipbuilding side, another 800 to 900 crores on the ship repair side, which makes it like about 3,000 crores.
Yep.
Now, of this 3,000 crores, this also includes ISC phase 2 also, which I think, if I'm not wrong, the scheduled completion is somewhere October to December 2020. So essentially, it means that for the full year FY19, and there obviously will have some more orders also, which the execution schedule would be post FY19. So essentially for FY19, we are looking like a flat to decline kind of revenue. Is that a correct assessment?
On the top line?
Right. Yes, sir.
See, on the top line, FY19, we will we had guided 2,700 plus, and after Q1, we are fairly confident that we'll go above 2.7. I'm not in a position to exactly say, but maybe even above 2.8. But that is where we are looking at on the turnover point on FY19.
27 to 2,800 crores.
Correct.
So, but then, sir, so is it that we are looking at some more orders to come during the year, from which we can book revenue in the current year itself?
See, the order book was not showing you this cost plus part, so the cost plus part will also reflect in the turnover as we move forward.
Right. And what is that cost plus part in terms of value?
Cost plus is all material and equipment on the vessel. See, as we have explained earlier, so the IAC altogether is a 19,300 crore approved project. And as of now, Jose, do you have that updated? How much have we recognized till now, including this quarter? What was it last quarter? Then you haven't.
Yeah.
There's a fair bit of IAC work that is remaining to happen. and it will come in from that, because see, the IAC work is being executed in phases which are fixed price part, and cost plus part, which is seamless across these three phases. And all materials is on a cost plus part, where we buy all materials at actual cost, and we get a markup of 12.5% on top of that.
So sir, what would be your guidance on this 2,800 crores of revenue? What was the EBITDA margin guidance?
Just a minute. See, at the PAT level, this year we'll see about 16%.
16% at PAT level?
At PAT level, correct.
Okay, and going ahead, so, I mean, what would be the guidance? Steady state, I mean, are these numbers steady state kind of numbers, or?
15 to 16% PAT levels we would see over at least next 24 months. And turnover increases, like I've always guided, 12+%. But now this year we'll definitely see 14-15% top line growth. And next year also I can stick my neck out and I say that it's somewhere around that level.
Right. And sir, lastly, in terms of CAPEX, if you can highlight what will be the cash outgo from our end in FY19 and 20?
FY19, you should take it, we have in Q1, so you should take it as 550 crores in FY19.
Cash out?
Cash out. Yes. Because we have our commitments also in this regard, which we have made to the ministry, which is 495 crores, but we think we'll do 550 at least. And next year, you'll have to give me some more time, but it's definitely going to be more than this figure.
Okay, so actually it should be quite big, right? It should be like 1,000 crores.
It should be, exactly. You're very right. It should be quite big, because we have the ISRF project all going well. We will get it into the last leg, and the dry dock project would have peaked. So it would be quite big. It would be significantly higher than what we are seeing now. But we're just working it out very clearly. See, we are again here. How it impacts is like from the net cash remaining and the other income, we'll see a little bit of a drop there, which we are aware of.
That is what my point was, that if we are expecting 16% margins at the net level, so about one third of our PBT comes from other income. At the net, so 16% at the net level shouldn't be sustainable, because we'll be spending like 1,500 crores over next 2 years.
See, ship repair, the margins are much higher, and at FY19 definitely we'll see significantly higher traction from ship repair.
Okay.
And this year, like if you Q1 also, like shipbuilding, this year we are seeing a fair bit of traction from the non-IAC shipbuilding part, which is of a lower margin level. But next year it is going to be predominantly the IAC turnover. So the margins, at least next year, should be sustainable.
Okay, sir. Thank you and all the best.
Thank you.
Thank you.
Next question is from Giriraj Daga from KM Visalia Family Trust. Please go ahead.
Yes, sir. A few follow-up that. First, like last quarter, we spoke about 75 crore of revenue from Mumbai Port. Now, since we're seeing delay, so what is the number you're looking for this year now?
It would be lower. We'll have to rework that a little bit. We'll have to rework that a little.
And just let me put it this way, like, what is the FY20 when a full year will be available? What is the number we can look at?
Yeah, we want to target this about 150 crores.
Okay, 150 crore. Okay. My second question, I also stick just with because we are spending a decent amount in the new CAPEX. Assuming that we don't get this IAC2 for maybe next 3-4 years, assuming. But can we take a repair work at a very large pace to offset this significant CAPEX what we have done to recover or to make money, decent money there?
That is exactly what is the fallback plan which we have. The challenge there would be people. the right people, because we in Cochin we do have people, but then when this new dock would be a very large facility, so there is going to be a challenge. So as we move forward, if we do not see traction on the IAC2 coming in the next, say, 18 months or so, then we will have to actually set in motion these plans. But yes, that is why we have actually schemed this dock in a particular fashion, because the gate is been created for ship repair also. It's a flap gate.
Okay. And so what is the total size of the repair market globally? Do you have any data there? Like, what is the total size? And what is the total size that the India Navy spends on the repair? What is the total size there?
I don't have offhand figures. Right now, but we can just bring this. I have some ideas, but then probably it won't be correct to just reel out those figures. So,
the point that we are already doing about 800 crore, and in a new facility we might have to do something like 1,500, 2,000 crore of ship repair.
Navy is actually, Navy's internal target is to offload 15% of their work. So now from a turnover point of view, like, see, I can tell you the Coast Guard is something like 400, 500 crores every year. This is what the Coast Guard does. So the Navy would be definitely trying to do, but the Coast Guard is predominantly everything they are offloading. The Navy, the offloaded part, about 15%, we'll just do a rough workout and we'll come back to you on this.
Okay, sir. Thank you and all the best.
Thank you. Next question is from the line of Jonas Bhutta from Phillip Capital. Please go ahead.
Hi, sir. Just a question on the Mumbai JV, sir. So recently, Mazgaon Dock has started work, or at least got possession of land at Nhava Sheva, where they intend to do ship repair for large naval vessels, which was also a target market for us, while we were entering Mumbai. In any way, does this disrupt your math in terms of the revenue expectation from this particular JV, given that Mazgaon Dock, who's built most of these ships, would be a primary candidate to even repair these ships?
See, we have also seen Mazgaon Dock has shown some interest in ship repair, and we are also watching what they are doing. Now, yes, naturally, if Mazgaon Dock is also coming in, yes, it's more people in for the same market, so it will have its impact. But the kind of ship repair experience and domain we have built up, and the systems we have built up, we feel it will take time for somebody like Mazgaon Dock to come in and handle ship repair the way we are handling. I can't explain too much on this, but then the fact is, yes, if Mazgaon Dock is determined to get into ship repair, naturally we'll have to fight it out. And only thing is, we feel as we are speaking, we are in much better shape on this stuff.
Sure. And my last bookkeeping question was, by any chance, the execution on the cost plus in this quarter was about 200 crores?
On the cost plus, just a minute. Yeah, the cost plus in this quarter was 216 crores.
Got it. Fine, sir. That's it from my side. Thank you.
Yeah.
Thank you. Next question is on the line of Sagar Gandhi from ICICI Securities. Please go ahead.
Sir, any update on the Surat facility, which was erstwhile belonging to ABG Shipyard? I believe CSL was also trying to take over that facility post the completion of the lease. I think that was...
Which one you are talking about, the Surat one?
Yes.
No. See, it's a fact which I don't want to hide, that we had gone and seen that facility, but then that was because we were nudged into seeing that facility.
But we didn't have any interest. Right on day one, we had communicated that we didn't have interest. So there's nothing we are looking at any of those facilities at this stage, even though there are a lot of people who still tell us that there are these facilities which may be available. And for strategic reasons, we must go in there. But our perception, at least as on today, is that we are having enough plans of expansion and both geographical and structural here. And we would like to concentrate and complete whatever we are currently doing. So definitely we are not looking at anything with any of the yards at this stage.
Thank you so much, sir.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you.
Thank you all for joining in, and we generally feel like things have gone fairly well during Q1, and as we have very clearly explained, the bright spark has been ship repair. Shipbuilding, we are expecting it to be steady to a notch getting better on the aircraft carrier part as we move forward. For that, we need to have this Phase 3 contract in place, because there's a fair bit of Phase 3 work which we are currently doing. And when we actually get that contract, we'll start recognizing those revenues also. In fact, I can say that we are already doing some work of Phase 3, but which has probably not been recognized for want of a contract. And that is the way we have schemed it also. So shipbuilding generally going okay. A little bit of a disappointment on the technology demonstration vessel of DRDO, but then we are talking it across with them, and we hope that should move forward. And by the time we talk next after next quarter, we hope the ASW Corvette contract should be done and signed, and we'll have better figures to report on the ship repair side. So thank you once again for all joining in. Thank you.